Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, we shall be discussing mathematical approach to successful Forex synthetic trading. If this is your first time actually coming to this channel, try to subscribe and turn on the bell notification so you get notified each time I upload a new content. The reason or the rationale behind this content is just to help a lot of people that are actually giving up and have actually been frustrated in the game of trading. This is very painful. A lot of more people are like blowing a lot of accounts and they lose a lot of money, and this is very painful right now. So I have to make out time to bring these insights to light. Okay, if you have been finding it difficult to make money in trading, especially synthetic market, because it's one of the hardest market. Forex is very easy. Maybe synthetic, you are losing a lot of money. It's very lucrative, but it needs an expert to actually make money from synthetic market. All you need to do is to make sure you subscribe to our VIP signal channels, and know we are about to come to the close of the year. You shouldn't go broke, you shouldn't be poor, next year. You should build your wealth from this September. We are actually accepting new subscribers, VIP subscribers for September intake, so you have to be among. I think if you can send me a kind of the September intake as a code, like if you can DM me September intake, VIP September intake, you are going to get a 10% discount, so that you'll be able to have access to the VIP at a lower cost. Okay, so I don't want to waste much time. Let's dive into this content. $sign of t, comma p, comma hash equals to f of b, comma s, bracket open and close. Then p e of t is equals to f of sl. So these are the two major equations we shall be used to make our trading easy, in making profit. These two equations are gonna help us to make a lot of profit. Okay, so the first one is the $sign of t slash p slash hash equals to bracket open and close equals to f of b slash comma s, bracket open and close, and then p e of t equals to f of sl, bracket open and close. Okay, so the major thing is to understand each of these symbols. So the $sign means signal function, t is time, and p is price, which like this price is a function of time. Okay, p is equals to price, which is a function of time. Then hash is manipulation factor. Okay, hash is equals to manipulation factors, which is equals to news event factor. It is a state constant. So if a news happen, especially in forex market, it will be constant for that period of time. Once the news dies off, that constant will be removed from the market. So you have to understand that these are very important, especially in forex. But in synthetic, there is nothing like news. So in synthetic, the hash variable will be 0, so it will not be included in the $sign function. Okay, that's the signal function. Now we have a PE of t. This PE of t means entry price function of time. Okay, your entry price is a variable. You are not just entering a market at a particular point. It's hard to say that this is the price where you are going to enter the market, but you can have ranges of prices. Now that ranges of prices can be converted into a function. So at different times, different prices are going to be sampled, and then using probabilistic and statistical models, you can be able to pick out a price that is going to be valid for you to make profit. Okay, now why I'm not going into the deep mathematical analysis that will be connected with this is that you don't need it, but I'm going to show you on the chart how these are applicable. Like, I'm actually giving you what you need here, then I'm going to apply it on the chart. You see that it's possible to apply this idea and succeed in trading. Okay, so P of T is not equals to PE of T. So P of T is not equal to PE of T. What is trying to imply here is that the price function of time is not equals to the entry price function. They're not the same thing. So you can have the price function of time independently showing how price vary with time, and is very different. It's much more different from the entry price function of time. The entry price function of time is a price equation that you drive in the process of trying to get an entry signal, or to get an entry price. To get an entry price. So the entry price will keep changing depending on the price function. These are things I'm going to explain on the chart. Now, F of SL is equals to stop loss function of time. Okay, F of SL is equals to stop loss function of time. Now, when you want to select a stop loss on a chart, why is it that the stop loss keep triggering? These are the things you don't know. It keep triggering because stop loss cannot be definite. It cannot just be one particular price. If you select the right stop loss, or if you compare your stop loss selection with respect to how price is behaving, you will be able to know that the stop loss will start varying. Like, the stop loss will keep changing from time to time. In other words, there will be arrays of stop losses. There will be different stop losses, but your own weakness is you don't know which one is going to give you profit. So when you understand that the stop loss is not a function of time, we can now apply valid calculus analysis to determine critical points on the stop loss, like to determine critical points with respect to the stop loss where the rate of change of the stop loss with respect to time will be 0. Now, if the rate of change of stop loss with respect to time is 0, then that point is a critical point, meaning that any stop loss you place around that point, about that price, any stop loss that is equated to that price is not going to be triggered, because price is not changing there. Like, there is no change of price. The PDT, which we can simply say is equal to the SLDT, will be 0, meaning that the price doesn't vary at that region. In other words, there is no how, whether it's liquidity sweep or other type of manipulation, there is no how they will reach such stop loss. Okay, so that is it. Now we have S. S is equals to self function of time. Now our aim is to optimize FB, S bracket open and close. Now F is self function of time, then B is buy function of time. I think I have said that. Now, if you want to buy a market, you are not going to buy anyhow. You are only going to buy when a buy function exists. Okay, you are only going to buy when a buy function exists, and you are only going to sell when a buy function exists. That's why a lot of people will lose more money. and few people are going to have access to this video, because any video that talks sense does not get view, but the one that we mislead people will get more view. But it doesn't concern me, because I like to prove that things are possible. That's why I do my video the way I do it. So it's left for you to be among the 90%. I'm sorry, be among the 10% that are actually succeeding in forex market. You shouldn't be among the 90% that are losing. So the only way is to actually take action. One of the actions you should take is to join my VIP signal channels, or enroll for my courses, or just take advantage of the free content and put them to practice. You will see your trading journey will change. And most times people, they don't have what it takes to actually understand the video. So I've said it all. Just talk to your mind, talk to your heart, and know what to do about it. So let's continue. Our aim is to optimize FP/S. Now, f of b, s, like the function of b and s is the biggest issue in trading. Okay, is the biggest issue in trading, because we say that from equation 1, this one is equation 2. Okay, this one is equation 2. Okay, from equation 1, we say that the signal function can be equated to the right hand side as a function of buy and sell signal. So when price are progressive, like as price is changing, buy signals are sampled alongside with sell signal, but one of these signals must approach 0 for the other one to exist. One of these signals must approach 0 for the other one to exist. Or let's say it definitely that one of the signal will be 0 for the other one to go to infinity. And you are not trading the 0 signal, you are trading the infinity signal. If you trade the 0 signal, then the infinity signal is going to blow your account. Okay, now look at it. Look at the optimization issues here. Look at what happened. When buy signal is 0, then the sell signal is going to be infinity. Okay, you are looking for those region of the chart, those region of the price action where the buy is 0, so that you can be able to get an infinite sell. So at this stage, the PED/SL, okay, the PED/SL must be 0. Okay, so your entry price function, the rate of change of your entry price function with respect to the stop loss is going to be 0. Then when these two conditions, like when these two conditions are satisfied, that is when B is 0 and the PED/SL is 0, then your signal function, which we stated in the equation 1, will be automatically equal to maximum. You will see it will be maximum, as if there is forex news and there will be a spike. Okay, like under 1 minute your trade is already in massive profit, something like that. Okay, now we now have steady sell, we have steady sell valid. Okay, so what is trying to say is when such events happen, then we now have the signal function equal to mass steady sell valid. It will not be valid. When it is valid, then you will not lose. Then when the sell signal is 0, then the buy signal is going to be infinity. the PE, the SL is going to be 0. You have to make sure that the PE, the SL is 0. Then the signal function will be equal to maximum steady buy valid. Maximum steady buy valid. So it's going to be valid. Then when both B and S, when both buy signal and the sell signal is equals to 0, then the signal function is set to dead or no signal. If you're a fan of GoTV, or if you're a fan of Starlink, what do they call it? Okay, let's use GoTV. If you're a fan of GoTV, if like, even when you have recharge, like when you have subscribed for the services, and then you try to watch some channel, and suddenly you will see a message on your screen telling you that there is no signal. That is dead zone. From the satellite, like the satellite near the above the atmosphere, like in the space, maybe those satellites were not able to relay data or relay signal to the base station. That's what it is. So the same thing happened in the financial industry. Okay, there are situations when the buy and sell signal are 0. So the signal as a whole is dead. So you shouldn't be trading. And most of these events, like this condition mostly come during ranging state in the market, when the market is ranging. Okay. So this analysis must be subject to top-down analysis. This is like this does not actually encourage you to just enter the market and start making decisions anyhow. You must still do your top-down analysis. Okay, now we have other things you should consider for this thing to hold. We have parallelism theory. Okay, we have parallelism theory. I'm going to explain it on the chart. We have eye orientation law. I'm going to explain it on the chart. Anyone that I explain, I will mention the name. Okay, or as I'm describing these things on the chart, I'm going to be giving the names. So we have plane direction theory, we have equipotential or Zeroth or dead zone law, we have internal structural signal reversal, we have market mind misleading or human signal opposition, we have potential theory, and then we have stability theory. These things are going to be used to make this idea come to reality. Okay, there is another one I need to add, which is closely related to the eye orientation law, and that will be, maybe I can put it in a bracket, that will be signal array. Okay, signal array. Okay, these are very, very important. Okay, now this video is taking time because it's worth it. These are philosophical approach to trading, and it is very powerful, like more metaphysical. It's more of metaphysical approach to trading, and if you understand it, you're gonna go far here. So let's open chart and start applying this. Now let's work on cash 300, or let me work on volatility 75 index. And then see where we are going. So this is monthly volatility 75 index in the month, because I do what I preach, I do what I teach. I say you should do your top-down analysis. Okay, so this is basically the monthly time frame. Now in the monthly time frame, what we see here is that after the market break this key level, this zone, it break this resistance, Then what happened? In the month, it tapped into the zone. When it tap into each time it tap into this zone, it gets rejected. Each time it tap into this zone, it gets rejected. Meaning that each time it tap into this zone, it creates a sell signal. It creates a maximum sell signal with a zero buy signal. That is a sign that this zone is what is analytical zone, is a zone where this mathematical concept will be applied. Okay, so inside this zone we have both buy and sell events, but at the end the buy is 0 and the sell is what? Infinity. So the most important thing is to understand the mathematical event that is happening inside this zone. That's the major thing. So this zone is actually subject to these equations. That zone satisfies these equations, but I'm going to specifically list the ones it satisfies, because it will not satisfy all of them. Other ones will be treated accordingly as I progress. It satisfies this equation: signal function as a function of time, or signal function with respect to time, then position or price, the P there is price, and then hash, the manipulation factor. So this signal function, which is equals to function of buy and sell, is actually satisfying this zone. Why? For you to make trading decision, you have to run structural analysis, and one of the structural analysis is break of key levels. So when price break this key level, we expect that price have to come and retest this level, and then after the retest, it can either, during the retest period, it could actually violate this zone by breaking it up and then pushing upward, or respect this zone. So if it is going to respect this zone, then it's going to be subject to what I'm saying. Okay, it's going to be subject to what I'm saying. Then if it's going to break out of this zone, it is still going to be subject to what I'm saying, but then in a new trend, because the current trend is downtrend. This is downtrend. Okay, so inside here, our signal function, which is dependent on time, because this is happening between the period of that was 2022, the November 2022, the 1st November 2022. It had been happening till this 2023, October 2023, 1st October 2023. Okay, so now as a function of price, you can see that inside this zone, if you go to much lower time frame, you will see that there are different prices orientations at different times. Okay, and then the manipulation factor, you can see these weeks. If you go to lower time frame, you will see a lot of manipulations. So all these are put into consideration. Then when you put it into consideration, you will notice that we're actually fighting on buy and sell. So what we want to see, that we want to see some zero effect, like where the buy is 0 or where the sell is 0, so that we can be able to know the direction of the other core variable of trading, which like either buy or sell. So here the buy is 0, so the sell is infinity. Why I said that the buy is 0? Why I said that the buy is 0 is because if you check here, there is a break of structure, meaning that the selling is massive. And then on a retest, as price is approaching here, it reaches a point where it stops going up, like here. So the rate of change of price, that is the PDT, is 0. If the PDT is 0 near this point, meaning that price is no longer changing to the upside, it means that since the PDT in the upside direction is 0, it means that the buy is also 0. Because buying means the market will go up. Therefore, we should sell. Now, before this sell will happen, we need to go to weekly time frame. When we go to weekly time frame, what are we seeing? In the weekly time frame, this is weekly time frame. In the weekly time frame, we see that once price tap into this zone, like the last week, the week prior to the week, after the week that the bullish candle tap into this zone, like when there is a bullish candle tapping into this zone in one of the week, then the next week a bearish candle happen, closing inside the body of the bullish candle. Okay, now we cannot apply the stop loss function yet, because I want to work on the stop loss function. We can't apply it on the weekly, because on the weekly the market is bogus. So let's go to the daily. On the daily, you see that we can easily see some critical zones. Okay, now look at this. These are shooting stars. These are rejections. This shows that we can cover this zone and optimize our stop loss about it. We can cover this zone because it shows that price is trying to go up, but it couldn't go. Trying to go up, but it couldn't go. Meaning that if we are placing our stop loss about this zone, we might, but a must, we will have a sure probability, like we will have 100% probability that our stop loss will save us, our stop loss will give us profit. In other words, the SL, the PE, the SLDT, the rate of change of the stop loss with respect to time will be definitely 0 around this zone, because there are many, there are discrete number of stop losses here. You can put it here, you can put it here, you can put it here, you can put it up there. Then when the rate of change, when price is coming near these stop losses and it suddenly stop coming, it means that it have a 0 movement, 0 speed, 0 acceleration. Then it means that we can place stop loss within such zone. Okay, that is what I mean by the SLDT being 0. So our stop loss can be above, we have to place our stop loss above this area that we sense that the SLDT is 0. Then when we have done that, the next thing is to consider our entry price. Okay, so let's go back to the document. We say that the entry price is actually a function of stop loss. So we have actually determined where the stop loss will be. Okay, so it's very simple. Once this stop loss has been planned to be inside this, within this zone, then we should be looking for entry when price start leaving that stop loss zone. So entering somewhere here will be cool. Okay, so you can now go to the H4 and see the reason why you should get sniper entries. Okay, now in the H4, you notice that we need a clear confirmation that price is no longer going up. We want a situation where the PDT is 0 in the upward direction, and then the PDT is infinity in the downward direction. And the only way that will happen is when there are break of structure. So you see that price break here, so you can start selling here. That's a sign that the market is going down. So after this break, see this big candle breaking, so we can enter here while our stop loss is still above. Okay, we can enter here, and then we should have got over 60,000 pip, and then maybe we should have risk. Let's say we enter here, we should have risk around that 4,000 pip. But then this is a very big risk. When you look at what we analyze on the monthly, you shouldn't be afraid to enter this market at this price, targeting over 82 pips, and then risking just around 13,000 pip. You see that we are targeting about 82,000 pip. 82,000 pip, and then risking 13,000. Now that will be above 1:6 pip. Like, 1:6 risk reward. Like, above is more than 1:6 risk reward, or let's say it's more than 1:5 risk reward. Okay, so that's cool. That's what I'm trying to say here. You can see that the buy is 0 and the sell is infinity. So the video is taking time. I'll be ending this, but there is sense in what I'm saying here. I'll be ending this. Try to take action. This is almost close to the end of the year. You need to make money before this year ends, and then you enter new year with wealth. You have to take action. You have to join my VIP. You have to enroll for my courses. Actually, this is just a celebrity content. Some people will take it for granted that, like, what is this guy saying here? This is a new something. This is just confusing. When you enroll in my courses, I don't actually teach all this free content in my courses. No, I teach you professionally what you need to know for you to succeed in trading. Okay, and then when you trade my VIP signals, you make money instantly. Like, you make money as fast as possible, because the risk reward is huge, statistical edge is big, the win rate is big, there is no loss. Thank you, and bye for now.